Hey there. Okay, so you are considering annuities. Guaranteed income and peace of mind in retirement is an exciting goal. And believe it or not, it's easily attainable. Stick with me here for a few minutes because by the end of this video, you're going to learn more about annuities than you thought possible and find out if they're the right solution for you. Does that sound good? After helping thousands of people plan their ideal retirement, reach their financial goals, and put their retirement income on autopilot, it's become pretty clear why Americans put over $360 billion into annuities last year. I get asked questions like this all the time. I'm retiring soon. What should I do with my 401k? Should I look at fixed annuities or indexed annuities? And what are the potential downfalls of getting an annuity? Before I talk about the different kinds of annuities, I want to start by discussing why annuities are even a thing. If you're like most of our clients, you've done your best to put every extra dollar that you could into your retirement savings, with the goal being to accumulate enough wealth to do the things that you want to do once you're done working. Maybe that is spending time with your loved ones or grandkids, or maybe that's traveling the world, or even picking up a new hobby or skill. We hear it all the time from our clients. The older that they get, the less they want to worry about money. They want to know that the income to fund their retirement is going to be there for them. But the reality is as you get closer to retirement, you have less time to recover from potential market downturns. Think about this. If you are 20 years away from your retirement and the market goes down by 10% this year, you have another 19 years to recover from that loss. But if you're retiring in the next 1, 2, or 5 years, or if you're currently taking income that's exposed to the market, you do not have the luxury of time on your side. When you withdraw assets while the market is down, your losses for those assets are essentially locked in. Unlike the accumulation phase, that money no longer has the potential to increase if the market rises. That loss will diminish the total value of your remaining assets. Over time, the chipping away of your assets can cause your money to run out quicker than you had anticipated. This is what's called sequence of returns risk. Let me give you an example. Let's say that you're retiring with a $1 million nest egg, and you plan to withdraw 5% per year, so $50,000. Let's also assume a 3.5% annual adjustment for inflation. Assuming that today's market volatility will continue, meaning you'll get both positive returns in some years and negative returns in other years, let's find out how long your nest egg would last under those two market scenarios. The first scenario is that you start taking income when the market is up. We're going to follow the same repeating pattern: 27% growth, followed by 9% growth, 7% growth, and then a 15% loss. When you start withdrawing income with 27% growth in the first year, your nest egg is on track to last you for 36 years. But what if you start withdrawing income in a down market? Let's take a look at the second scenario. Say the first year that you withdrew the income was the 15% loss, and then followed by the same order of returns, with 27% growth the second year, followed by 9% growth, and then followed by 7% growth. In this scenario, your money is only on track to last you about 23 years. That is a 13-year difference between the first scenario and the second scenario, simply because you started withdrawing your money in a down market. As we both know, there is no way to predict what is going to happen or how much the market will be up or down when you start retirement. Now you can see why annuities exist and why they're so popular. They protect the downside from market losses while still allowing you to participate in market gains and fixed interest rates. They help reduce the risk that your retirement will look different than what you had envisioned. Now that we've covered their purpose, let's dig into how they actually work. Annuities primarily have two different phases: accumulation and income. The accumulation phase is the period when your account is growing and being credited a fixed interest rate or a percentage of the market's gains. The longer that your account grows, the higher balance you're going to have at the end, meaning more income that you can generate from that account value. One other key aspect of the accumulation phase is that the credited interest is tax deferred until you actually withdraw the money from the annuity, meaning your money will grow a lot faster than if it's sitting in a bank or a CD. The second phase is the income or distribution phase, which is exactly what it sounds like. You are taking income. So let's take a look at some examples from some recent clients that we've worked with. We recently had a client who is 60 years old and had about $200,000 in an old 401k. He wanted to convert that account balance into a stream of lifetime income that he will never outlive. We were able to help him turn that $200,000 into more than $25,000 per year in guaranteed income for life when he plans to retire in about 5 years. We also recently helped a client who had purchased an annuity several years ago that was already producing income. The client's agent didn't keep him updated on rate changes, and we were actually able to replace his existing annuity with a product from an A+ rated carrier that paid out an additional $6,000 per year than what his current annuity was paying him. Now, why are annuities provided by insurance companies? In short, it's because they are incredibly stable financial institutions. Since 2001, there have been 567 bank failures. Compare that to only 31 insurance carriers over the same time period. I do also want to specifically point out that here at Leverage, we only work with top-rated insurance carriers, and for our higher net worth clients, we recommend diversifying across multiple carriers to eliminate concentration risk. If you're watching this and you think that an annuity might be right for you, then let's jump into some tips and get you on the right path now. Number 1, know your goals. When do you plan on taking income from the annuity? Are you looking at annuities more for asset accumulation or asset distribution? These are a couple of important things to know that's going to influence the type of annuity and specific product that's recommended for you. Also, focus on highly rated insurance carriers. The main rating agency for insurance companies is called AM Best. Make sure to get access to these ratings to ensure that you're purchasing an annuity from a quality insurance company. If you work with our team, we provide these company ratings to all of our clients. Lastly, do not forget about servicing. Once you've purchased an annuity, you'll want to make sure that you're working with someone who is going to monitor that annuity for any potential rate changes to see if there's other opportunities out there to get you into a higher yielding product. So, now that we've hit on the basics, I invite you to schedule a complimentary meeting with our team. On our first call, we're going to learn more about your goals and objectives to make sure that we're putting together the right options for you. We'll provide you with an easy-to-digest online comparison report along with our own recommendations so you can easily see how much account growth and income you can get with an annuity. We'll take time to answer any and all of your questions that you may have to ensure that you're making the best decision for yourself and for your family. If you do decide to move forward with us, we'll work together to fill out the application and get your annuity activated. After activation, our proprietary software will monitor your annuity in real time to make sure that you're still getting the best rate as market conditions continue to change. This means each month you'll know whether or not you still have the best income and account growth options that are available to you. My name is Justin Gibson, and I can't wait for you to take action and achieve the peace of mind in retirement that you deserve. Please find a time on the calendar next to this video that's convenient for you, and we'll find out if an annuity is ultimately going to be right for you. Thanks for your time.